Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 11th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. You know, yesterday we had a lot of Fed governors speaking, and they really didn't give us any consistent message, to be quite honest. Bullard basically talking about the fact that the Fed may have overdone it to the upside, and a couple other Fed governors basically thinking they're on track. So really bizarre that they are that far apart, to be quite honest. Anyway, going forward, I think that Bullard is right. So we'll talk about that here with the economic data. We got across the pond in Europe, we got Italian industrial production, which Italy isn't the industrial area necessarily, is more focused over in Germany, but we did get Italian industrial production, and it was a big drawdown of negative, or a big pullback of negative 1.6%, expected to be only a pullback of 0.2%, and they revised last month's number from a positive 0.1% to a negative 0.1%. Nice, or not a huge revision there, but another revision there, making even the headline number look worse. Then we got over in Great Britain, we got GDP coming out at 0.2%, higher than the expected 0.1%. Generally speaking, that's a good thing. But we saw the manufacturing production number coming in at a negative 0.3%, expected to be a positive 0.4%, albeit they did increase last month's number from, just slightly. It was a negative 0.9%, I think, to a negative 0.6%. And then construction output came in at 0.6%, expected to be 0.2%. And finally, we got industrial production out of Great Britain that came in at negative 0.4%, expected to be a positive 0.3%. Another big miss there. So both manufacturing and industrial production missed in Great Britain. Then back over here to the United States, we got CPI, Consumer Price Index, came in at a negative, came in at, I might have to get my glasses out, a little fuzzy this morning. Negative 0.1%, expected to be negative 0.1%. And then core consumer price index, stripping out some of the more volatile aspects like food and energy, came in at 0.2% and expected to be 0.2%. So in line with expectations there. That's about it across the pond and here in the United States. Across the pond, not looking so great. Not seeing the inflation through CPI that all these Fed governors should be worried about. You know, they're worried about their balance sheet, the ones that are a little bit more hawkish. So that's not really a mandate for the overall economy. They're more concerned about their own assets than they are at worrying about the overall economy, which is part of the problem from 2009 when we talked about that. They should not be getting into that because it will create this kind of scenario going forward. All right, anyway, that's enough of my soapbox. Let's just talk about the overall markets. We've got crude oil coming off just a little bit. I expect it to kind of stay in this 50 handle. I thought it would move a little bit closer to the mid 50s, but with the economic data not really being that great, that's going to kind of show that demand's going to be pulling back for black gold, and we could start seeing prices start to drop. But having said that, I think right now in this lower to mid 50s is the range for crude oil right now. Gold futures making a bit of a push to the upside, you know, wanting to test that 13 handle again, or 1300 handle again. I think gold's overdone to the upside. I don't think that the economy is really starting to sputter, to be quite honest. I just think that we're just not getting the expectations we expect. Across the pond, that's a different story, but I'm talking about here in the United States. Across the pond, it's not looking so great. Start seeing us slow down there, that's going to kind of put a drag on our economy as well. Talking about the bonds, they're starting to make a push higher. You know, yesterday it was a little bit funny when these Fed governors were talking. The bonds just really didn't know which direction or who to listen to. Today, they're starting to push a little bit higher because I think that this economic data showing across the pond is not so great, and therefore interest rates are going to have to remain at these levels or start to decrease over the course of the next couple of years. That's what the bonds are starting to look at. Then we've got the VIX. VIX still continuing to come off. It's just slightly. We lost that 20 handle, which I'd like to stay up in there. I was digging the high premiums we were getting here. Let's talk about the Dow Jones Industrial Average. It's off a little bit as well. All of these are really inside days from yesterday. We did have a nice big range yesterday. We didn't see that late day sell-off, which is a good thing. That's a more bullish sign. We can see that this was pretty much an engulfing pattern yesterday. Today, pretty much an inside day. We'll see that show up in the daily or the breakdown of the daily chart on the E-mini S&Ps. Again, NASDAQ pretty much an inside day, despite the fact that we are negative. It doesn't feel that negative, but it is in negative territory. E-mini S&Ps negative as well. Another inside day. We'll see that show up kind of in the daily chart. This blue section is each a day section. Each candle is a 30-minute bar. And as you can see, overnight inventory pretty flat. Coming into the day, they got flushed out a little bit. Economic data tried to get ahead of the economic data. They tried to get rallying, but this economic data is a real heavy weight on the shoulders of equities right now. They're really trying to figure out what to do, hold this up. Next week is going to be a big week for directionality as we start really seeing a lot of these economic data, all these earnings coming out. That's the start, really. We're seeing a couple this week, but really next week is where we start ramping up the earnings season. Right now, just an inside day, pretty quiet for a Friday. And then on to the trades that I've done. IWM I added. I did this as more of a delta adjustment more than anything. We've had this big sell-off, a snapback. I don't really see it happening where we rally right up to this point of control and kind of settle down right now. I think that we might resume to the downside. So I needed to adjust my portfolio a little bit. GDX was the really only negative delta stock or asset in my portfolio. That being said, so I decided to add some with IWM. It's going to be a pretty short trade. I'm going to have a short leash on it. It's more of a delta adjustment, like I said, than anything, just to protect myself. And I went into the February, sold the 152 calls in there for 72 cents. It puts me quite a bit of ways above where we are after this big rally. I think that even if the market wants to go back up to the point of control, we're going to see some profit taking off of this bounce and just a small rollover, if anything, and then continue on. So we don't continue that pattern of lower lows, lower highs. All right, we'd have a lower high, but it would be a higher low, which would kind of signal that we were breaking that pattern on the downside, that bearish pattern. So that's what I'm looking for in the equities going forward. So this delta adjustment hopefully is only going to be on for a couple of days before I get out of that, and then we get that rally to the upside. That's about it. The only thing that I've traded, I'm trying to get out of some GDX, that trade that I have on. It's it's close to the 50% of max profit with me averaging into that. I added a little bit, if you remember. So that being said, I'm very close to the 50% of max profit. I'm working a bid in there, 20-cent bid for my 2.5 calls that I got short. So the 22.5 calls in GDX. All right, that's it. I hope everybody has a great weekend and a profitable day today. Hopefully you can find something in the tea leaves here and enough to get you into the water. It's all warm. Get in there. Let's play. All right. If you can't take that, take it easy.